Okay, we are live. It's myself, Eli, and Roy, and we're gonna probably have Manuel join in a few minutes. They're pulling a Tanner, and we're also gonna have Nate join, and then later, around 5:30, uh, we're gonna have Steve join, and Steve is gonna sit there while we all, as Hims shareholders, are trying to sell him on Hims. That's going to be a lot of fun. So stay tuned for that. But the first things first is we got to talk about this earnings. And what did it close at today? It closed, 12%, 13%, something like that. 18%. It closed 18% today. Nate is backstage. I'm going to bring it up right now. What's up, Nate?
What's up, guys? Sorry I'm late. Just hopped out of a meeting.
It's all good. I think Manuel should be joining any minute now as well. Let me see. Oh,
$50, huh?
$50. Yes, my covered calls are underwater, very deep underwater, but that's okay because
Didn't you just tell me like 2 months ago, man, I'm never selling calls?
He just got them pulled away and writes more covered calls.
Yeah, exactly. But so here's the thing, man. The market was down, and I was writing cash secured puts in the mid $30 range, and I was like, oh man, I'm not going to be able to continue running a wheel for the foreseeable future because it was so far down, and so I was just averaging down, and I think this is going to give me more flexibility because I was writing like very aggressive calls. So yeah, I am the reason you're 46 plus. You're welcome, and we have Manuel. Welcome.
How are you guys? I'm sorry I'm late.
Long time no see.
Well.
It's been a while. Is my mic okay?
Yeah.
So hold on, I gotta fix this.
Okay.
Maybe that's better.
Maybe this is better, right?
It's been a while, man.
Yeah. Last time we had an episode, I don't even remember how things were.
I think it was maybe the last time we were on was the last earnings call, or maybe shortly after, because I remember in February was when I couldn't do it anymore because I was starting to go into the office.
Yeah, I think it was literally the earnings call.
Maybe I have the actual background. Here we go. My little Hims background. Yeah, this is gonna be fun. So the plan for the two of you guys that joined late is we're just gonna talk about the earnings for about half an hour, and then I'm gonna bring Steve up here, who doesn't own
Oh,
Hims,
no way, really? Okay.
who is skeptical on Hims, who is he's talking shit on X, and we're gonna bring him up, and we're gonna do a little bit of an episode where we sell him on Hims. It's not going to be hard to sell him on Hims. This thing is growing like crazy. So
I think you might end up shorting it. Not really.
no, you know what? I should actually DM Tanner too, because I know that he's like, oh, I don't know healthcare, and he just doesn't like making money, I think. So
Well, no. I mean, I actually had a really good discussion with him and with Amit last night. We reviewed several of the recent earnings calls, including Hims. Tanner does own technically, like, is it $200 now of Hims? But it's not a
that was forced on him, by the way.
Yeah. I wanted him to actually have some gains in his portfolio because he certainly doesn't have quality names like NVIDIA. So, but no, like, it was a good discussion. I'm glad to get into it with some other Hims bulls too, but when you're the only one. So Steve is going to experience the other side of it because he's a skeptic, and that's okay. And by the way, for people that are not in Hims, I'll just say this, my opinion, but you don't need to chase this. If you're like, hey, maybe I should pay attention to this Hims thing, maybe I should get in right away.
Yeah.
Hims is a stock that tends to give multiple opportunities for entry. I think it will probably at a lower level. There's no guarantees of that, of course. It can also go a lot higher, and it wouldn't surprise me if it does that in the short term. I think it's a fantastic long-term company, but that you don't need to chase every play. So if you're like, hey, this is too volatile, it's not for me, don't feel ashamed of that. You don't need to be in every stock. I've missed them too.
Yeah, I mean, look, the other side of that is like, I don't even
Going to
know
100.
dollars is chasing, right? Like, I bought yesterday at $40. I bought another 300 shares, and I'm like, okay, and people were like, oh, Tevis, you're making aggressive degen plays. And I'm like, well, if it goes down 20%, I'm still going to hold it. If it goes up 20%, I'm still going to hold it. So like, I don't understand. It's a $10 billion company doing $2.5 billion this year. I'll buy that all day, every day, So like at $20, it was a no-brainer. At $13, when, me and Roy were getting in, it was a no-brainer. It was absolutely a steal of a deal. But even at $40, like, I don't see that as something that's like, I don't see it as chasing, and maybe it is, but I don't know.
Well, it's a stock price action. So, but yeah, this right here, I mean, it's pretty attractive. So it's not going to do that throughout this year. There's some headwinds, but when you have triple digit growth and you're talking about billions of dollars of growth, yeah, it gets attention. It gets a lot of attention. We're seeing that today. And I don't know what the shorts are thinking. So do we want to do like top level thoughts or any highlights, or how do you want to approach this, Tevis?
Yeah, maybe we can start just to go around the horn and just get some high level thoughts and then go from there. Like, ideally, I'd love to talk about the lab facilities and the personalization aspect separately, and then weight loss separately, and then everything else I think can be bucketed into high level, but open to ideas. Maybe Eli or Nate, you want to start?
Sure. Yeah. I think overall, really good quarter. I think, and Tevis, I think you and I align on this. I think the only thing I felt that was a little bit of a downfall or downplay was the guidance. I thought they would come in a little stronger. And I know Roy has a little bit of thought of that with that too. But I thought they would come in a little stronger. But other than that, I mean, everything was incredible. I think the people that get stressed about gross margins, they've been guiding for mid-70s gross margins the entire time. So I don't know why that stresses people out. If we see it fall below 70, then I think it's, maybe you start to look at it. But I think at 73%, we're sitting fine. They said next quarter it's going to go higher. And so I think overall, great quarter, added more cash, still no debt. I mean, I can't complain. Not an out of 10 quarter, in my opinion.
Yeah, I mean, I agree with you. You got triple digits increases year over year for all the big metrics. Revenue up over 111% year over year. Free cash flow up 321% year over year. I mean, Hims is just proving itself to be a compounding machine. One thing that I thought was very important, I'm sure we'll get into this a little bit later in detail, was the $6.5 billion in guidance for 2030. Another key note that I was impressed by was the monthly online revenue per average subscriber was $84, up 53% year over year.
Yep.
I mean, huge. I agree with you. I agree with you, Nate. Margins are not a worry for me, or they shouldn't be a worry for anyone right now. Like you said, if we see continuing decline, that's going to be an issue. And I'm with you as well. The only thing that I was shocked and a little disappointed by was we didn't get an increase in 2025 guidance. So
I do think the caveat there is it still is 60% growth that they guided for, which is still unbelievable. So I think we're like, we're wanting 80% when we're still going to get 60.
Yep.
Also to note with the revenue, fastest growing quarter ever of them being public, by the way, year over year growth. 111% is the fastest they've ever had as a public company. So just want to call that out. That's pretty sweet.
Manuel?
Yeah, so I think it was a great quarter, as always. But I wouldn't be surprised if we saw like the stock price tanking, because over the past like 3, 4, not 4, because the Q1 of last year, not the Q1, the Q4 of 2023 was pretty insane. It was when they rolled out the oral solution for weight loss and all that, and it started to become a weight loss play as well. And that's when the market got pretty excited about it. I remember it went up like 30% in a day, from like $8 to $11 or $12. And everyone started to see Hims in a different way. And even though it was a great quarter, like an insane quarter, let's say, I think that it wasn't as perfect as the last quarters were. And investors, everyone had huge expectations. Like it went up like 50 or 60% in the month ahead of earnings. And then you had like some not so good things, let's say, but that, in my opinion, were expectable. For instance, the revenue guidance. I mean, yes, it's not good to see like the first sequential decline in revenue ever for the company. But I mean, it's understandable because the shortage is over, and we've known this for months. Like everyone is aware that the shortage is over, and after a certain day, Hims is not legally allowed to sell without those exemptions. Then margins. We also knew that margins were going down because of GLP-1s becoming a larger portion of revenue. And the fact that they say that gross margins are increasing in the next quarters also made me make me think that the branded versions that they're now selling in partnership with Novo Nordisk, I think they're not expecting much revenue from that. And I think it's reasonable to say that, because first it should probably have like much lower margins than the compounded GLP-1s. And so if they expect a huge amount of revenue coming from that, probably gross margins wouldn't go back to the uptrend again. And second, I mean, this partnership is very good because of the litigation risk, which decreased significantly and was, in my opinion, the main reason why the stock was so heavily shorted. And that was insane because of that. And I think that reason alone was enough for the stock price to like skyrocket on that day. But I don't see this as a major growth driver for the company. I just see this as also because Novo Nordisk on the same day also announced the partnership with Roe, with LifeMD. I don't think this is a partnership as good as Andrew is trying to like claim to be. I'm not saying he's lying, not whatsoever, but I think he's also always very for the past like 2 or 3 quarters in every earnings call is always like very proud of having such strong retail backup, and like he tries to emphasizes the things that he knows are keeping the shorters really heavily into him. But overall, I think it was a very good quarter as always. I mean, but the thing is, everyone knew this quarter was going to be incredible, and that's why I think the stock could breathe a bit now. But I mean, with this short interest, it's clear that the shorters like run to cover, and they are a bit afraid that we have like a similar thing that we had in February. So I wouldn't be surprised to see like it keep going up. But I would like, fundamentally speaking, I think it could breathe a bit because of all these resets in expectations because of the GLP-1 shortage.
Yeah. Roy, you want to go next?
Yeah, the on the bullish side, like the one surprise, and I agree with Manuel, like last quarter was actually better than this quarter, even though you wouldn't, if you looked at the numbers, you wouldn't know that per se. But there's a lot more surprises. So one really nice bullish surprise was, of course, that guidance through 2030. It makes it very easy to track as far as like where you would expect a lot of things for the company would fall in line. They had good comments on it as well. I love the number of questions that they took. The transparency is there as well during the earnings call, and that's very important. But to Manuel's credit, I'll say that there's basically 4 bear arguments against Hims. One of them was already tackled prior to earnings, which is great. The Novo Nordisk, as far as the legality stuff, the being involved in a massive lawsuit. And that really, it's a great partnership. Just you're exactly right, Manuel, that they are probably not going to be sued by Lilly, and certainly not going to be by Novo Nordisk right now. Yeah, and so I even talked to a guy that had shorted Hims in the past, and he said, yeah, he's not doing it now because I mean that was his bear case argument. He's like, well, that one's over. There are still some declining margins, which 900 basis points is a lot. We know it's the GLP-1s. It's a temporary headwind. But bears might say, oh, they're lying, So I don't know that they shifted there. Tariff risk is still a thing. We'll have an announcement on Monday next week for pharmacy manufacturing here in the United States, which may be good for Hims, may not be good for Hims. We don't really know what's going to be in it. I get a little nervous whenever Donald Trump talks about tariffs, but that's not a forever thing necessarily. And as far as like competition, that's another one too. Like the Novo Nordisk thing, lots of competitors, lots of things out there too. So they do continue to claw into market share. I didn't see that emphasized as much this quarter, but they did in the previous quarter. So a lot of good stuff, but it was expected to be very good. Next quarter is going to be softer. And I think that they set up expectations very well there. And I actually loved that they did not raise guidance, because I was actually concerned last quarter. That was my only one concern last quarter was from that earnings report. It's like, man, their guidance is really aggressive. They've never missed on revenue guidance before. I think it was $725 million expected in weight loss solutions alone. We know that semaglutide is going away. We know liraglutide is just not that good of a product. We know that margins are lower anyway, and they have this delicate balancing act, even with like the Novo Nordisk partnership. So was this a perfect quarter? No, it's a great quarter for a great company. Next quarter is probably the most important quarter out of the last year and out of the future year too, out of these 2 years, I would expect. So we'll have to see how they do. They seem very confident though, and frankly, you can see how they execute. I think there's a reason to be confident.
Okay, there's a lot of things I'm going to repeat, but like you guys hit the broad brushstrokes. There's a couple things you guys didn't mention, which I found interesting. The COO, yeah, that was a big one. Like this dude comes with 20 years plus of Amazon experience. He has logistics experience, the PillPack, Amazon pharmacy experience. Like if Hims is going to launch up their scaling game, then this is going to be the right person, the right operator to get them to that next level, because those two worlds collide perfectly with regards to the logistics and with regards to the healthcare space. So that was, I think, a very key acquisition or a key addition to the team. And then, what I said in my previous videos was that I think personalization is going to become more and more of a no-brainer value proposition for more people. That like there's going to be a transition in how the market perceives Hims, because right now there is still a large percentage of people that view this as a marketing company that sells dick pills. And eventually, over time, it's going to become more of like, an ecosystem that focuses on preventative health as well as just the personalization aspect. Tribe Labs is going to help them do that, and their integration of Tribe into the ecosystem towards the end of the year, I think, is going to be very impactful, because what you're going to see is as personalization increases, churn decreases, average revenue per customer increases, and those customers that have a personalized solution with no side effects on Hims are never going to go to their competitors. So that's number one that I think is like the through line of why this earnings is important, is because it gets closer and closer to the integration of Tribe and the deepening of that personalization moat. Number two of why I think this earnings was important was exactly because of those partnerships with weight loss, because Novo and Eli are not going to sue their partners. And Hims right now, I think, has a much more durable foothold in the weight loss segment, right? If they can sell Wegovy, and then later they can sell Mounjaro and Zepbound, and they can sell the oral solutions and liraglutide, which was launched, this quarter, then I think they're in a very solid position where the big boogeyman to come crush this company was the FDA decision. It came and went, and now they're still here, and they're now partnering, and ultimately I think they're going to be fine, right? So two big bear cases were essentially dispelled, right? Number one is the competitors are going to come eat Hims lunch, or regulators are going to come eat Hims lunch from the weight loss perspective. That's fine. And then the second one is, what is the real value proposition of this business? And we're finding out more and more every single quarter that it is actually a deeper ecosystem that is based on data insights. And it was interesting, right? Because like in one of their long-term vision slides, they were talking about how AI, and I know that's a buzzword, but like how AI mixed with the personal biomarkers that they're collecting from their users, their ambitions are not just to have that lead to more personalization of the current offerings, but their ambitions are to have more preventative care for the future. And so I think that's a really interesting and compelling value proposition that goes far beyond a marketing company that sells dick pills.
Yeah, and we saw, like you said, marketing as a percentage of revenue went from 46 down to 39% this quarter. And so if we continue to see that downtrend, plus the increase in revenue and gross margins stay consistent, like their operating leverage is just going to be insane over the next 6 quarters.
But that was through the quarter where they had a Super Bowl ad and their marketing went down. It's like, okay.
It's nuts.
No, but to be fair, they explained that it's not going to stay at 39% throughout the year. It's going to have like a 1 to 3% per year decrease, which is still great, because not too long ago, before GLP-1s, the main bear case against Hims was that it will never turn like a profit with those huge marketing expenses, which, to be fair, at the time were pretty huge, like 70 or 80% of revenue. But I mean, with the gross margins they had, it was clear that these were like this operating leverage would kick in. And with the infrastructure investments they've been making like across the the entire supply chain, and also when I started to invest in Hims, they didn't have the agreements with affiliated pharmacies. That was really the major decision when Hims was like a not even $1 billion business. That's catapulted, let's say, the business to the next step, was to better control the supply chain and to make sure that they were like getting to this point of distribution where they are right now, a platform that can distribute everything in healthcare. They're obviously going through a specific path, which I think is the right strategy, but they have a huge optionality, and the supply chain they've built over the past few years is very important.
You also had them hint at international expansion a good bit in this earnings, in my opinion. Perhaps the UK first. Another big keynote was 60% of members were on personalized treatments.
Yeah.
That is the Hims moat, in my opinion.
Wasn't that 29% last year?
Yeah,
So it doubled in a year.
It doubled in a year.
Like,
Yeah,
so
and
that
70%
argument's gone.
of new subscribers in this quarter were chose a personalized solution.
I mean, it shouldn't be so surprising, right? Because that's what that's the cohort they're actively focusing.
Exactly, and it's like the same price. So why wouldn't you like?
What do we?
It's a
what do we
no-brainer
think
for customers.
about the international expansion? Because I feel like I have a hot take. I feel like it's a little bit of a distraction. This early on to announce that, to me, I don't know. I understand what they were doing, but this quarter, like they basically, it felt like, in my opinion, I think I can see from the Bear side, a bunch of pump where they announced 2030 guidance, they announced international expansion. They're talking about all these things, and it feels a little distracting to where they need to be headstrong now, which they're clearly, executing.
Well,
but to me, it seems like we only have 2 million members in America. Why are we focused on international right now?
exactly.
And especially
they're already in
because the other countries don't have the same healthcare system as the US.
Yeah,
I speak for myself. I'm from Portugal, and I mean that model would never like work as well as it works in the US, especially because we don't have purchasing power to buy the solutions. But yeah, we have free healthcare. It takes months to get it. So personally, I would use Hims, but most people wouldn't. And in the UK, I bet it's the same. Probably in Canada, I'm not sure. Tavis is a good one to answer this. But I also feel that they should focus the marketing spend and all the capex they're spending in the US, because the opportunity is huge, and they're already having a good brand awareness, and every quarter you can see that the moat is widening. So maybe it's a good decision in the long term. Let's see. But I also agree with you that it could be a distraction. However, this is a capex light model, so even if it doesn't work out as well as it should, I mean, it's not a huge risk to take, I would say.
Yeah, and I trust management. I just thought it was a little weird. Curious what you guys thought on adding that in there.
Yeah, I think it was more just so people were aware that they already were in the UK and that they can build on that to more. At least that's how I took it, rather than them saying, "Hey, we're going to go crazy with the international expansion." It just what this earnings call really was casting that long-term vision. That's one of the reasons why they had that 2030 guidance as far as revenue. And I wouldn't say they have clear line of sight, because 2030 is a long ways away, but they have a clear plan in place. And part of that over the next 5 years, not necessarily this year, is to really ramp up exposure internationally. You heard things about how they're doubling down on automation, they're doubling down on AI, they're working on all these different elements to just already improve what's working great. And this is all a part of a cohesive strategy. So it wasn't quite an investor day. It certainly wasn't that. It's an earnings call, but they had elements of that in there where they're like, "Hey, we want you to get the big picture in case you're just paying attention to Hims for the first time." And I think the reason why they did that is very strategic, because people got confused. Some people got confused on Hims, not us, that this was just a weight loss story and that was basically over. But when you see 111% year-over-year revenue growth, there's going to be some people, and I expect there's some people who've been watching today that are like, "Okay, I'm paying attention now." And then Hims is like, "Okay, here's what you need to pay attention to over the next 5 years." That's what I was thinking that they were trying to do.
I like that take.
Eli?
Yeah. I mean, no comments on international expansion. I'm curious on your thoughts I'm curious on your thoughts, Roy, about the guidance for 2030, the 6.5 billion in revenue.
Weak.
Yeah, I think it's doable. They say at least it is aggressive. It's not small, but it makes it easy. I told folks when this was trading at, I think it was 25 or 30. I was like, I see this as a pretty easy 5x. There's no guarantees out there, but pretty easy 5x over the next 5 years. There is risk. It's going to be very volatile. It's not going to head up in a straight line. But just looking at where they are in their TAM, looking at their execution, this slide never shows up well. So if you can throw this up though, Tevis, I'm not sure if it'll see the colors or it's kind of hard to see in person. It's easier to see, but like this purple.
Looks good, sir. No, looks good.
Okay. Yeah, this purple bit, and I'm colorblind, but I wish they kind of
zoom right. Can you zoom?
What's that?
Zoom.
Well,
there you go. Much better.
Yeah. So anyway, they're taking market share. No matter how you measure it, they absolutely are. At an increasing amount, it's other than like GLP-1 shift, it's not really destroying margins. It's pretty easy to chart out. Will they get there? I think so. Is it guaranteed? No. Are there risks? There sure are. But I think a lot of those risks by the Bears are way overstated, including competition. So yeah, I love that they stood pat on guidance because I think it's risky if they raise it much. It's very aggressive. But over the next 5 years, I think that they'll get there pretty easily.
Well, here's one thing that I was, and maybe is a question, like, why would they announce the 5-year plan now as opposed to last quarter? Because last quarter they announced full year 25. That would make sense. Like, hey, here's full year 25, which is coming up, and here's also the next 5 years. Like, why wait a quarter to announce it in Q1?
To be honest, to pump the stock.
Well, yeah, that's what I thought too.
Everything they're doing over the past few months has been sort of trying to fight the short. I mean, I don't blame them, to be honest, but that's why I also got a bit mixed feelings over the past months. For instance, spending marketing cash on ads to ask for people to sign a petition to continue the GLP-1 shortage. I hated that move, for example. Announcing the COO in the morning instead of in the earnings call. I mean, that's totally okay, but it was clearly to try to push the stock higher. I mean, a lot of even the prior quarter, they announced the acquisition in the morning when they had the earnings after hours or in the day after, something like that. I'm not saying that this is the typical red flag as it usually should be interpreted as, especially in Hims' case, which is kind of every time Hims does something, Bank of America, 5 minutes later, comes off with a reiteration of the sell rating. So I think it's just playing by the same rules, let's say.
Yeah.
But to be honest, I clearly feel that and I'm not saying that it's a misguided guidance. I think it's pretty achievable. And they always give or set up good expectations, let's say. So
I think it's sandbag too.
Pretty achievable, but probably the main reason was to try to squeeze the shorters harder.
Yeah. And real quick on that before we jump in and try to convince Steve to buy the stock. A lot of companies, it doesn't really matter what the share price is too much. They have a vested interest. It's more pride thing. For Hims, it's not. And I think that's maybe one of the reasons why you see a little bit more focus on that, which I don't mind as a shareholder. It's to my benefit. They will dilute over the coming years. It's part of their strategy. They don't do crazy, stupid acquisitions. I think they actually do acquisitions very efficiently. They integrate them very well into the ecosystem. They know what they're building. Go back to the earnings call comments. Dudum had mentioned a number of future acquisitions, not what they are, not when they'll do them or anything, but they will. And a large part of what they do, even though they're profitable right now, is going to be through equity. And so the higher the price is for Hims, the easier it is to do that efficiently for shareholders. So I don't mind that. But that's the reality is you need to be understanding if you're in Hims, there will be some dilution. It's intentional to build out this ecosystem in part through acquisition. That's not the only thing they're doing, but I think that's the why.
And I'm probably a little more bullish than Roy real quick is that I think the guidance for 2030 is actually pretty sandbagged. It's only about a 22% CAGR for the next 5 years, and I just don't think they're going to 22%. That's a 2.35 billion midline for this year is a 22% CAGR from that number. is
I didn't
Well-
calculate it that way. I calculated it like 27 something percent.
I could be
Oh,
wrong.
yeah, it's like 22% CAGR.
Yeah, it's 22%,
Okay,
which
maybe
to
I
me is
calculated-
weak. I'm more aligned of like 8 to 10 billion by 2030. I think that is obviously
Yeah.
more bullish, but I think that is more of what I expected, like a 30 to 40% average for the next 5 years.
Yeah.
So
I also
I-
had
I
like
do-
8 billion for 2030.
I
Yeah.
do know that that Steve is here. I also see this comment. We should also get Tanner in here. I messaged Tanner. He said he's live streaming until 6, but we'll join at 6. So in 30 minutes, we'll get yet
the
another.
entire community in here.
We're just gonna have them all purchase the stock today. Yeah, Steve, welcome. I saw. So here's the context. Yesterday, I was live tweeting.
No, I get the context. You need 5 people to pitch me on a company that I
Yes.
know nothing about. If you can't do it yourself, I got it.
Exactly, Steve. I need the support. Yesterday I was live tweeting about HIMS and I tagged Steve and I said you need to get on this company. And then he DMs me and he says, "Let's do a show about it where you convince me." And then we were also doing this show, so I was like, let's just merge them and have 5 HIMS bulls gang up on Steve. So.
If you
So,
can
okay.
convince me to buy it, I will make a sizable position tomorrow.
All right. Well, what do you know about HIMS right now?
Nothing, except they make little pills. That's all I know.
Okay, that's probably what the average person who doesn't
That's
invest
all
in
you need to know, man.
Yeah, that's the whole case.
little pills that make the stock go up. All right, where do we even want to start, guys?
What do you care about, Steve? What do you want to know?
It's not what I want to know. Tevis needs to pitch me on this.
All right. Okay. Cool. So first of
Tell
all,
me the pen.
they make a few more products than the little pills, and they've been expanding that pretty rapidly. They've been launching like 2 to 3 new products every single year, new product lines. The big one that they launched in 2024 was weight loss. So they do basically like the ED, which is what you know them for, what you know of them for. They do hair loss and they do like skin. They have 2 brands. They have one for men and then one for women. And then in 2024, they launched weight loss. And then this year, they're also launching new products as well. Weight loss was the fastest growing individual segment, but them as a company, like some of the main bear cases for HIMS is that they're just a marketing company. They're a compounder. They're just reskinning existing products and then marketing it differently. And that's their value proposition. That's been the bear case, I think, historically for the company, but they're going on far deeper than that into integrating users into their ecosystem. And one of the value propositions there is through personalization. So they're personalizing dosages, they're personalizing the solutions for their unique users. Back in January, I believe it was, or December, they bought this company which does at-home testing kits. So basically, where they can take a sample of your blood and your biomarkers, and based on your biomarkers, cater the actual solutions to you. What that means for users is it means fewer side effects. It means instead of taking 3 pills, they can take 1 pill. It means a whole bunch of different things that all contribute to this moat of having them not go to the generic solutions because they have something that's catered and bespoke to them. What that means is that they won't churn off the platform. As of this quarter, they had about 60% of total users be on their personalized solutions, and that's a number that they're pushing more and more of as they unlock more capabilities from a personalized solution point of view. Now, the other thing to keep in mind is so maybe let's pause there and then we can jump into the other, like anything to add on the personalization moat.
Yeah, throw this visual image up because I know Steve likes charts and graphs and stuff.
Right.
This is personalization. Basically, is making sure that the medication matches the person. Instead of the other way around, they do that through MedMatch, their AI algorithm. The more data they have, the more people they have. It's kind of a virtuous cycle. the better it is as far as for the individual user. And they're also able to offer, like if you have, for instance, ED, which you seem to think that this is an ED company only. It's not. But then do you want to do the hard mints? Do you want to do, the little pill? Do you want to do, like, they have oral solutions, all sorts of different things. They can't do a form factor of each and every one of these types for every product, because some just don't work that way. But one thing that they can do is basically compound these so that you have, if you need a treatment for testosterone or oral testosterone that's coming out, and also ED, they can give you one thing that you take that takes care of both, instead of trying to keep up with 50 different pills. They're expanding that out. This is basically what is a part of their moat, because if this was just the non-personalized stuff, then it's like, well, what's the easiest for me to get a hold of? What's the quickest and what's the cheapest? And so shifting to here, this makes it a much more durable moat.
Do you have questions on that part, Steve? Like just that alone, or do you like push back on that as a potential moat or a potential bull case? And then we can jump to the other parts.
No, I mean, I'm not going to push back on anything. I don't know enough about the company to really push back on anything. I went through the slide deck while the two of you were explaining it. My reservation / question about this is, I guess first I'll start with a question. Typically, drug companies that I'm invested in, Pfizer, Bristol Myers, AbbVie, they have drugs on patent. And then they come off patent, generic versions occur, people siphon off of it. Does Hims have anything proprietary where they have anything on patent that is proprietary to them?
No,
Yes.
it doesn't.
No. Okay. So if they don't have anything that's proprietary to them, they're basically going after compounds that are off patent and trying to make a better mousetrap.
Yeah, essentially. Instead of selling it generically, they compound it to, whether, as Roy said, change the form factor or personalize the dosage or whatever. And then you had the exemption of GLP-1s in general, because they were in shortage. And when they are in shortage on the FDA list, you can do the same thing essentially. But now they're not anymore, and that's why the next quarters will be softer than this one, let's say.
Okay, so they are effectively piggybacking off of other companies, which isn't a bad thing, because they're letting other companies spend all the money on R&D, get everything through FDA process, come to market, let them have a patent for 3 to 5 years or whatever the term is. And then when it comes off patent, they're basically just siphoning whatever the compound chemistry is and creating a new product, and they're using their own sequencing to make a tailored solution to the person.
Exactly.
Yeah, they're the platform.
essentially.
Yeah, they're the platform that. Yeah.
It also makes it much more affordable.
So how come a company like Pfizer or Bristol Myers hasn't, because they, I don't know about Bristol, but Pfizer's Viagra. So how come Pfizer hasn't done something similar to ED pills as Hims?
I would say there's no alignment. Let's say the big pharma, what they want when they develop a drug, for instance, AbbVie with the, I don't remember, Humira, I guess. Yeah, they developed. Yeah, they developed a biologic drug, which is essentially what most big pharmas are looking for, because Hims doesn't sell. For instance, Hims would never do this with a biologics drug, because you can't compound the biologic drug. What you do is you develop a biosimilar, which is a different type of medication, which tries to replicate it, but it takes a lot of capex and many years to develop, and it has to be FDA approved as well. What Hims does is more of the practical treatments, let's say, hair loss, weight loss, dermatology, and all those treatments that don't require the use of substances that really need to be clinically studied for a long time, R&D. These are only substances, let's say, that are studied for 10, 20 years. For instance, the ED pills, I don't recall the name of the substance, but these are fairly studied drugs. So it's not really the Pfizer, AbbVie, and those big pharma aren't really wanting to grab the customers for being a low cost provider. They want to take advantage of the situation of the US healthcare system, I would say, and get the maximum price they could even imagine to get back all the ROI from the R&D. So I don't think, I think it's fair for you to ask, for instance, how can Amazon Pharmacy replicate this in terms of the personalization and all that? And with like talking about that, I would say it could in the future pursue that path, but I don't think it's really what big pharmas want to do, because this is kind of a not really the business model that they work for.
So
I mean,
I think
yeah, go ahead, Roy.
I think that the what's helpful is maybe the analogy, and I don't. You can take it too far, but just simple analogy. What they're trying to do is being the Netflix. So big pharma are the movie makers, and Netflix is the distribution play. That's essentially what Hims is.
So, Roy, let me ask you this. SoFi is expected to do $8.95 in adjusted. Why is Tevis always smiling? Always. This guy's like
I'm a happy guy, bro. Continue.
he's the happiest person I know. I swear to God, he's always smiling.
He owns Hims. I mean,
I
So-
own him.
SoFi is expected to do $895 million in adjusted EBITDA this year. That's the high end of the guidance, which the three of us probably think they're sandbagging. Hims is expecting to do 1.3 billion plus in adjusted EBITDA in their 2030 fiscal year.
mhm.
Hims has a market cap 9.37 billion. It's probably just over 10 billion after the pump today, maybe closer to a 10.5 11. SoFi's market cap is 14.2 billion. I got to think that if SoFi stays at half of the compounding rate and growth slows over the next couple of years, they're still going to be between 2 to 3 billion of adjusted EBITDA. While I'm not happy with SoFi and I hate adjusted EBITDA because I think it's the stupidest metric there is besides adjusted free cash flows, and companies should just report normalized earnings instead of trying to hide stuff. But why should an investor put their money in Hims that has a slower profitability surge through the next 5 years than a company such as SoFi, Palantir, Nvidia, Amazon, et cetera, et cetera?
That's such a red herring, because one of them is growing at 111%, first of all, and SoFi is growing at 33%. So, like, that's for starters. Secondly, they're in different verticals, and you own like 80 stocks, so you should know about
I own more than
diversification.
80 stocks.
Well, my point is like investors own many stocks in many different verticals for different, around reasons, whether it's wealth preservation, just to control for any one vertical crashing, or whether it's some type of cyclicality, or because the growth stories are different for those stocks. Like, I think it's a fool's errand, I think, to say, why should I own Hims instead of SoFi? Because when extrapolated, you'll say, why should I own Hims except, or Nvidia or Amazon? And like, then you're going to funnel all the world's capital into 5 stocks if that was your argument.
No, so my argument is if I'm going to deploy new capital, I want to deploy it where I'm going to get the best ROI. I think that's every investor's goal, unless you are building out an income producing portfolio, because then capital appreciation is not necessarily your number one goal. It's generating reoccurring income while mitigating downside risk. So if I'm going to deploy new capital, why would I deploy it to Hims over an Amazon or an Nvidia at this point?
It depends on what you're looking for. Why would you put it in Amazon or Nvidia? Are you only looking at the adjusted EBITDA, or do you care about like margins, or do you care about the growth rate of the top line?
Talking about where I'm probably going to get the highest ROI. And I don't know. That's the question I'm asking you guys.
How do you define ROI?
Capital appreciation.
Yeah, but like I don't have a magic wand to make stocks go up or down. I don't know. Like there's going to be some type of correlation between what the company does and what the stock does. And we know that the market, like that correlation is absolutely busted, because there's stocks that are like, 300 billion doing the same amount of revenue as like Hims almost. And there's stocks that are like 10 billion doing that same amount of revenue. So like that correlation is broken. So your measure of ROI is what?
No, I'm just asking, where do you think you're going to get the best capital appreciation on deploying new capital? Look, HIMS, what I just did the math. HIMS has phenomenal growth rate. Okay. When I look at this, it gets me very interested. And what I'm seeing based off the consensus estimates is that they are expected to generate $1.28 of EPS in 2027, which is 91% growth. And they're trading at 38.65 times 2027 earnings. I think that is very fair, if not a little undervalued, for the amount of growth on the horizon. My question is, something like an NVIDIA that's trading at less than 18 times 2027 earnings, that has 48% growth. Now, I get it. HIMS has a higher growth rate. Do you think if you were to put whatever the amount of seed capital is today in HIMS or put in NVIDIA over the next 2 years, what do you think appreciates more?
Carly,
Well, I'm not looking over the next 2 years. Sorry, I want to let the gang respond too. But like one of the aspects that I really like about HIMS as well is the length of their runway for growth. Because they're only a $10 billion company and they're going off of the US healthcare industry, like obesity alone, these are massive total addressable markets that they're addressing. And NVIDIA is a multi-trillion-dollar company, right? So you have to also think about that in terms of what is the total addressable market of how many households do these products play in, and what is the opportunity there? Because I think that HIMS has a higher growth rate than NVIDIA right now, but the more important piece is I think that they can compound that growth in a much easier way because they're earlier on in their growth story.
So if I can kind of restate the argument rather than like numbers, which I mean this is meaningful because HIMS put it out, and frankly, if SoFi guided through 2030, we know they'd be insanely sandbagged just because Noto will do that. But what I look at HIMS is the numbers. Yes, it's important, and I have an idea of where I think that they might be going over the next 5 years as well. But the biggest thing to me is if you can find a business in an area that has a growing TAM that is ripe for disruption, that has leadership that seems like it's very good at identifying that next big thing, and they continue to execute on it again and again at a high level, that they promise aggressively, but they always meet their promises or beat their promises. I think they miss EPS one time by a fraction, and it was a while ago, but they've never missed on revenue. Where you have capital efficiency, no debt, they control their margins incredibly well, that they balance risk and reward very well, that they have clear communication, and they're not willing to settle for inferior products. It's hard to see this not working out very well. Now, can I predict if this is going to be better than NVIDIA over the next 5 years? Well, no. I think NVIDIA is an incredible company. I've invested a lot of money in NVIDIA recently. It's my number one allocation over the last 3 months. It's a safer play. I think there is more upside with HIMS, and there's a lot I think that's not built in those 2030 guidance. So it's a risky stock with a lot of reward. I wouldn't say extreme risk here, but there's risk and pretty extreme reward as well. Probably won't hit peak potential, but it's I don't know. It's compelling just looking at the strength of the business, the team, the execution, what they've delivered, where they are at as far as a TAM. And I actually, in case you haven't seen this slide, because I don't recall seeing it in the earnings, but this was from fourth quarter, and I showed this to the guys earlier. If you can throw this up real quick, Tevis, and I'll be quiet. This is basically a lot of their competition that's out there, and you can see they continue to just take more and more market share. And the last thing on this is they do this without having to continue to scale their marketing in line with their revenue. In other words, yes, marketing is increasing and ramping, but revenue is ramping much more fast.
All right, let's go through the numbers real quick. Am I correct? They have no debt?
Yep, no debt.
Right.
Okay. So they have no debt. They're buying back shares, but they're still issuing shares. So it's basically keeping it a little even. I'm going to assume there's actually
You should assume some dilution.
Look at the-
Yeah, they didn't buy back anything this quarter.
Yeah, they're diluting a bit.
Yeah, they repurchased 25 million worth of shares.
Yeah, but they issued more through.
That's what I'm
SBC.
looking at. So they issued for stock-based compensation.
Yeah, it's quite high.
Okay. Free cash flow positive, which is great. I love the no debt. Margins are very good on gross profit. Operating income, so selling in general expenses, admin, that's their largest line. What is the lion's share of that? Marketing?
Marketing is the,
Yep.
the
it's-
largest.
sounds like.
Yeah.
I mean, look, the numbers are very interesting. The financials are really good for a young company.
Andrew Dudum's calling.
I like their executive team. It looks like they've siphoned off of a lot of big companies and built a well-rounded executive team
They just got a new COO, Steve, yesterday
from
Ooh,
Amazon. I'm
from
aware.
Amazon. Yeah.
It's interesting.
Yeah,
I mean-
look, the team has proven to execute. I mean, Andrew's done a great job, but I just want to touch on one thing that I think is important. So right now, you have Hims and Hers has 2.4 million subscribers. 60% of those subscribers are on personalized. Okay. Now, when you have them give this 2030 guidance, it was revenue of 6.5 billion and adjusted EBITDA of 1.3 billion. Now, me personally, I think Hims is going to crush this guidance. Now we can go back and forth on this. Maybe me and Roy don't believe or agree on this completely, but the reason why I believe they're going to crush this guidance, there's two things right here. So in 2022, Hims guided for 1.2 billion in revenue and 100 million in adjusted EBITDA for 2025. So right now, we're on track to deliver 2 times the revenue and 3 times the EBITDA for 2025. Now, I'm not going to sit here and say in 2030 we're going to have double that, 13 billion in revenue and 2.6 billion in EBITDA. I'm not saying that because the bar is much higher now. But I think it's extremely conservative. I think the company's going to crush it. And one last thing, on the last earnings call, the CEO, Andrew, he was asked a question by Hims House, which is a popular retail Hims community. Basically, what his thoughts were or what he thought about subscribers going forward, like subscriber count. He said 10 million subscribers by 2030, 2020, 2031 is easily achievable. That's 4 times the amount of subscribers that we have right now.
I'm sorry, I want to cut you off and ask you a question. When you say subscribers, you mean that this company has reoccurring subscriptions from their customers?
Yes.
Yes.
Yeah, it's only subscription based.
Can someone find the chart of the average
Only subscription.
subscriber? It's
Yeah,
like
they have wholesale, but it's like 1% of revenue.
That's really interesting. So it makes it a more sticky environment.
Yes.
Yeah.
And
And
the
they're actually
personalization aspect is exactly that.
Yeah.
The essence is to retain customers, because the main problem of the models of these telehealth companies is the churn rate. They always have very high churn rates.
And if we're
and
sharing the
Hims-
screen, sorry, keep going. Let me cut you off.
Yeah. And Hims has a modest churn rate. They never reported it, but the retention goal is to be 85% plus. But now with personalized subscriptions and other initiatives, the retention has been improving gradually, and that's why Tavis was pointing out to the personalization aspect of the company, because here I would say the best you can do is to have the lower churn rate possible in the sector, and you do that by having some kind of differentiated aspects. And Hims does that through the personalization, and then as economies of scale kick in, they also started to lower the prices of longer term solutions. For instance, instead of choosing 3 months or 6 months, if you choose like a full year of treatment right away, you have a much higher discount. And that's why they also, for instance, now have like, I think 90% of customers have a treatment with more than 1 month, which like a few years ago was most customers just opted to buy 1 month just to see how it worked. And now it's moving from a much more stickier customer base. I wouldn't call it right now the stickiest customer base ever. It's not like a software as a service company, but it's getting way better each quarter because of all the initiatives that the company has been taking place.
Yeah, like most, like 90%, like Manuel was saying, Steve,
Exactly.
sign up for multi-months, like 3 months, 6 months, or indefinitely. and they just get the stuff delivered to their door. There's also a discretion aspect with this, like the entire, I wouldn't say mission, but value prop early on in the company was if there's a stigma or a taboo around these products, like you're better off getting them direct to consumer delivered to your door in some generic packaging as opposed to like going to the pharmacy and asking for a big box of Viagra.
And can you go
Yeah,
back to
'cause
that
you-
slide real quick, Tevis?
Yeah,
Go ahead,
sure.
go ahead.
I also think it's important to note and highlight the acceleration of average order volume. So you look back at Q2, it's pretty much flat between like 53 and 57. And as you can see, since Q2 of 20 last year, it's starting to slowly increase and spike up. Obviously, it's because of GLP. But I just think
Yeah.
that's another thing to note as well as, average order volume. And
Yeah.
I
on
wouldn't draw
on-
much conclusions of that because of the GLP-1s and
Until
For sure.
quarter three. Yeah. Quarter three
Yeah.
will tell us. But
Yeah.
yeah, it's early.
Yeah.
Yeah.
And so maybe we can jump into the weight loss segment because I think that's a big part of the story. Go ahead, Manuel.
let me just add something to what you said about the stigma. That's exactly why you see Hims as a dick pill company, because Hims started as a dick pill company. It didn't even have like the Urs brand. It was fully a brand for men, and they just like delivered the Viagra in a very discreet way to your door, like it was a normal package. And the value proposition in the beginning was just to like not make you face the doctor or face the pharmacy guy, like to ask for your Viagra, let's say. And then they started to, it was kind of, I don't like to do these big analogies, but it was kind of Amazon with books. They kind of started to widen the categories to other similar stigma categories with a huge stigma. For instance, weight loss, hair loss, dermatology, and all the categories that Hims grabbed in the beginning were those that had a huge stigma to face a doctor or to face whatever people you need to face to get the treatment. And now they're starting to widen apart from that, but so far it's still the same. There's, if you check the categories, there's probably no category that, I mean, you might feel comfortable, but generally speaking, let's say that's how they started to raise the brand awareness, I would say.
Yeah, and I mean, look at here, Steve. Like these are just 4 of the verticals that they're playing in, and keep in mind they're launching like 2 to 3 new product lines a year, and they only have 2.4 million total subscribers right now. Like the total addressable market of each one of these verticals individually is orders of magnitude larger than what they have right now. So this is what I'm saying about the runway being long, because this is not even the full list of what they're going to launch in the future, right?
Are they only US based or are they in other countries?
Right now, only US, but I believe they have a small UK presence, but that's
All UK presence.
Yeah, but the UK presence is just wholesale. So they have a few like shampoos and creams and stuff for dermatology and all that selling in a few stores, but it's just like, I don't even know if it's 1% of revenue. It's just, they have a wholesale part of the business, even in the US, but it's just to, they even say that, and in this earnings call, they said it, it's just to just
marketing.
increase the brand awareness. Like you're like in your shop, you see Hims on the shelf and you see, oh, Hims, I saw an ad of these guys, and you just like go check the website or so, because it's just like meaningless.
So let me ask you guys this before you go into the additional verticals, which I think testosterone is going to be huge. But so I just ran some numbers. They grew in Q1 2024 at a 45.8% year-over-year growth rate. And that accelerated to 110.64% year-over-year in the quarter they just reported, I guess, yesterday. Do you think that growth rate is going to continue in Q2 year-over-year and Q3 year-over-year? Because the difference between Q1 and Q2 in 2024 is only $37.5 million. What did they guide for Q2 on revenue?
540 midpoint.
5 what?
540, the midpoint.
540. So
Steve, real quick,
sequential decline.
The reason why, and it's the first quarter that they'll have a sequential decline, is they had the sugar rush of revenue from being able to compound GLP-1 solutions. Large scale, it's called a 503B pharmaceutical exception. And that, as soon as the FDA announced that the semaglutide, which they were compounding, went off the shortage list, then that started ticking down. So they do have a little bit of that revenue in quarter two, but most of that goes away. They are, I'm sure, trying to cross-sell some of their other products, including their new partnership with Novo Nordisk, instead of just losing all of those folks. But there will be a 1 quarter decline.
What did they guide for 2025 revenue?
It's very
2.35 billion midline, 60% growth.
Yeah.
What was the number? Does anybody know what the
2.35 billion.
235?
Yep, it's midline.
One thing to keep in mind, Steve, is that GLP-1s launched in the second quarter of 2024. So you got to think of comparable periods as well. Like this is an easy
Yep.
comp, but next quarter is not going to be an easy comp.
Okay,
That's
so
why
at
triple
235,
digits.
their average quarterly revenue would be 587 and a half. So yeah, that's really good growth rates. I'm actually very interested.
Steve, that's assuming that they come in line, which is like every single quarter for the last couple of years they've been beating.
Yeah, I
Yeah,
mean, I'm
so-
making general assumptions. I still don't know much about the company, but when I look at this, I'm like, you know what? Maybe I'll start a position and I will just sell a lot of cash secured puts around it because I'm going to get paid 2.5% of my money every week and a half, selling cash secured puts 14% out of the money.
Steve, you said sizable position at the beginning of this pod. Let's not mince words now. Sizable.
I said, if you could convince me.
And keep in mind, the last 5 years they've been public, they've outbeat their yearly estimates by 29% on average of their yearly estimates. So I don't think they're going to come at 2.35. I was thinking more 2.5 to 2.7, but we'll
Yeah.
see.
That's what my
Um,
range is too.
Yeah, so just
So
keep
is
that in
this
mind as
the
well.
most exciting growth stock right now?
Yes, that's what we've been trying to tell you.
It's actually the second highest, the second most depreciated stock in 2025, I believe. It was first at one point in time in terms of the stock appreciation in 2025. Like it's insane.
I still think it's first.
No, I think it's like second or third or something right now after the drop. But we went up to 70 in February and then we dropped back down when the FDA decision came out.
All right, Roy, you know what I'm going to ask. Can this get as stupid as Palantir got?
Yes. So one other thing to note, Steve, and I would not, I mean, you do you. I'm not going to tell you what to do, but I'll tell people in the comments. I don't invest in this for the short squeeze, but you see that pop if you
What do you
look at
mean
the
short
chart.
squeeze?
Oh yeah, this is the other important part.
Oh,
This
we
is a
never mentioned this
profitable
part, did we?
company, growing rapidly, executing at a high level.
Roy, go back. What do you
short
mean short squeeze?
33% short interest.
33% short interest.
How can this have 33% short interest? It's not freaking
Yeah.
I don't know.
half. There's
Okay.
no debt.
I
Yeah.
don't know.
You should have
It's
led
because-
with that.
Yeah.
How do you not lead with it's a third of the shares are short when there's no debt, it's profitable, and you have growth rates like that?
We
That's
can't
the
answer. We don't get it.
Exactly.
Okay,
Also,
so the point-
the shorts bought more shares or shorted more shares today at $50. Another 1.2 million shares they shorted. Just can't say
You
that.
know, it's like these people who play the don't pass and craps. I will never understand it.
Yep.
The other thing with this, Steve, too, I'm sure you've seen this, but it's a very small float, at least right now in its stage. They will acquire companies. They will do that using equity that hopefully will be at a very high premium so that they can dilute shareholders less doing that. But for now, it's a very small float stock, 33% short interest, and accelerating very well, although quarter two will be that first quarter-over-quarter decline in history. So
It doesn't even look like they're diluting shareholders that much anyway.
it's a little bit, but it's
Yeah,
not
but
like
it's
when
nothing
you hold
that-
Palantir, it's like,
Nothing
yeah,
crazy.
Yeah.
I mean, look, they made like what 2 or 3 acquisitions over the last 2 quarters of smaller, like either facilities
Yeah, I'm
or
looking right now.
No,
There's
yeah,
a-
the dilution is mostly from SBC. I mean,
Yeah.
over the past years, they had the few acquisitions they made were really, really small. Like the largest acquisition they made was like $31 million or so. That's
Okay,
like 10% of the cash pile.
Buying back shares, profitable, triple digit year over year growth, no debt, good margins and are growing TAM with more verticals they're going to get into. Yet you're telling me one of the most shorted stocks in the market.
The most shorted, I believe.
Yeah, but it has a context, let's say. So
So
HIMS,
what are the 5 of you missing, or are the people shorting this just stupid?
let me explain it. So HIMS on May of last year started to compound GLP-1s because of the shortage. As we told you, if a drug is on shortage, they can do their compounding exemption and all that. And basically, as the shortage was fading out, the analysts started to ask Andrew Dudum, like the CEO, what was the plan for those offerings, and he started to sound like he didn't care about the shortage going off, and that HIMS would continue to sell their personalized GLP-1s because they were personalizing the dosage, so they were not infringing any patents. And so they started to enter in a gray area, let's say. That's when the first, as we told you, like the bear case was always that they wouldn't be able to turn a profit because of the margin of the marketing expenses. But then the bear case started to be the litigation risk. And a lot of short reports started to appear on the company saying that they would get sued until the end because they were trying to buy a fight with big pharmas like Eli Lilly and Novo Nordisk. And they didn't fight with Eli Lilly because they ended up not providing a compounded version of their GLP-1s. And so Eli Lilly cannot technically sue them, but Novo Nordisk can. And everyone was pointing out to that happen. It really felt that it was something highly likely to happen in the future. However, like recently, last week, HIMS announced a partnership with Novo Nordisk to sell their branded versions on the platform. And now everyone seems to believe that the litigation risk decreased considerably. And that's why we think that the stock is squeezing, because on that day of the partnership in pre-market, it went up like 40% just because of that partnership, which is not by any means a revenue growth driver. Is really, like as we talked in the beginning of this episode, it's really the bullish side of things. It's besides the validation of the distribution platform and all that, it's really the litigation risk, which was the main reason why shorters were like heavily shorting HIMS. And that's probably why it's up like 20% a day and like 60 or 70% in the past month, or even higher, because I think shorters are getting less sure about that potential lawsuits coming from Novo Nordisk.
So Tanner, can I ask you something?
Absolutely.
In addition to why you have a hat that's ripped on the brim, and I guess I'm just gonna have to buy you a hat so you can wear a new hat. If I told you that there was a company that in Q1 2024 grew their revenue at 45.5%, and in Q1 2025 grew their revenue year over year at 110%. They have a 73.5% gross profit margin. Their operating income is $58 million. They are buying back shares, no debt, which I already said, but for the third time, no debt whatsoever on the balance sheet. And they're expected to do 67 cents of EPS this year. And over the next 2 fiscal years, they have 91% projected growth on EPS. And they're going to go from a 2025 forward PE of 74 to a forward PE on 2027 of 39. And it just happens to be the most shorted stock in the market at 33%. Would you buy that?
Yes, I would buy that.
Well, I think we have to buy HIMS at this point.
But okay, so here's the thing. I just got here, by the way. I didn't hear any of
And
the
Tanner's going to
conversation.
be a perfect candidate because he's wearing his hat inside. The guy's going to go bald. I mean, perfect for the hair vertical.
I mean, he's perfect for multiple verticals that HIMS offers. Continue.
What are you going on about? All right, I just got here. I'm already catching heat right now.
Yeah, you were late. That's why.
No,
Go ahead.
I just listened to AMD's call.
Who cares about AMD? Anyway,
Well, you don't want to
seriously,
hold on. Okay, I just got here. So the only thing that's held me back from HIMS is not knowing the market. So I don't know their large competitors. I don't follow any pharma, healthcare, anything. So
All right,
whenever
what
I
do you,
see
what do you want to
something,
know? What do you want to know? Let's do a Q&A.
why is it shorted 30? Why is it shorted 30+%? I don't see what are the
So-
bulls missing?
I don't. It's the risk that's associated with owning a compounder because they're a new entrant in a space that's dominated by these legacy players that have a lot of resources. First of all, second of all, it's if you're working through patents, you're always going to risk legislation. But now what we're seeing, and this is why the stock is up so much over the past week. This is what Manuel was just saying when you joined, is Hims is partnering with Novo on the weight loss. Andrew mentioned on the earnings call yesterday that they're already in talks with Eli Lilly as well for another partnership there. The risk of litigation is, I wouldn't say entirely quelled, but it's definitely in a much, much better spot than it was a month ago, number one. Then the other side of it is regulatory perspective. If regulators come down and actually, say that Hims can't continue doing whatever they're doing for whatever reason, the biggest risk there was the FDA decision around the compounders. The FDA came, they said, hey, Hims, or they said semaglutide is no longer on shortage. Hims can no longer compound, and they have until May 22nd, and that's fine. The stock fell. Hims then came out 2 days later on their earnings, and they said, we're going to grow weight loss 100% regardless of this. And that's like, both of those, I think, are being alleviated. It's just residual risk that's associated. But I think a lot of the shorts are covering. And I mean, the stock was up 20% today. So
I like it.
I'm not sure what you guys would add there. I mean, Emmanuel, you did a much better job of explaining it when Tanner was just joining. But like, what would be like if we had to steelman the short side? What would that be at this point?
I really think it was just the litigation risk and the FDA, stuff like that. And that's pretty much been solved with the Novo Nordisk partnership. And I don't know. I just don't think that's going to happen.
So I think beyond that, competition is always a thing. We saw that when Amazon announced their expansion of their pharmaceutical line. I think it's overstated, but I mean that's really what they say is you're like, hey, there's no differentiation here. There's no real moat. That they overstate the level of personalization that they're able to do. And then with the GLP-1 stuff, even with the partnerships, they're like, okay, either this is not meaningful in the sense of revenue, or it is meaningful, but it's going to crush their margins. And so they have to walk a delicate tightrope. I think the real thing is that just takes the wind out of the sails for the litigation risk, which was probably the biggest bear case and probably why most people shorted, like Nate said.
Yeah.
I would add here that the market, and we all have been discussing this, assumed that the litigation risk decreased considerably because of this partnership. But as we were discussing about the earnings, it doesn't seem to be like, it doesn't seem that Hims is expecting much revenue from this partnership. So what I would say keeps a bit the litigation risk of Novo Nordisk is that they also asked in the call about the Hims continuing to sell personalized GLP-1s and how they were confronting Novo Nordisk with this, considering that they now have talks. And at the beginning, Andrew was like, oh, Novo Nordisk knows what we're doing. Like, we told them what exemptions we do. And then another analyst started to ask a few more specific questions. And he kind of was not that comfortable, let's say. And he was like, oh, of course, we will never agree in everything, of course. But we do it by the book. We're as blue chip as it gets. But I think the risk here is if Novo thinks that Hims is not doing things by the book, in case this partnership isn't really that meaningful, as we were kind of pointing out, they could just stop the partnership and sue them anyway. That's would be the what keeps this risk. I agree that it decreased significantly. I totally agree with that. I'm just taking the bear side, as you asked, Davis. I would say that if Novo Nordisk is a multi-billion-dollar company, this is not really a big deal for Novo. It's more for Hims than for Novo. Because like if they're getting 100 or 200 million dollars from Hims is much, and that's nickels for them. So if they really want to sue them, it's not this partnership that will completely take them off that path. Sorry. But at the same time, they wouldn't really start a partnership if they were planning right now to sue them. So I think this decreased the risk, but I think it didn't completely eliminate it.
Yeah, I think the other thing to keep in mind, and I have it right here, I made a post about this, is like you have to understand the scale of these guys. Like Eli Lilly alone, their Mounjaro product did like more revenue in 2024 than Hims' entire market cap, right? Their Zepbound product did like 4.9 billion revenue. Like the scale is so crazy disparate that it's not even worth Novo's time to pursue a lawsuit there, because like they're making money hand over fist. And so it's just a matter of incentives. Like they're better off having a partnership, especially because Hims, it'll really depend on the volume at which Hims is doing the personalized semaglutide solutions. Cause like they have a patent, right? And because of the shortage, the FDA was like, hey, everybody can make it. You can ignore the patent. Now the shortage is over, and Hims is arguing like, okay, if we personalize it enough, like we change the dosage, we change the form factor, we remove some side effects because we have Tanner's biomarkers, let's say, we can get around the patent. Those are very specific cases. They can't just like mass produce it anymore after May 22nd. So it depends on how seriously Hims wants to continue making those personalized solutions, on how seriously Novo will take it. But Hims is not incentivized to do it en masse, because they have now a partnership with Novo that they don't want to, screw up. And then Novo is not incentivized to sue them, because why would they? It's not even worth the headache, because they make so much money on these products regardless, like more money than their entire freaking market cap they made in 1 year.
Yeah,
So
I would just add the counter argument here. I mean, they make a lot of money, and I agree that in like the same position, I wouldn't have that headache. But you have the example of Eli Lilly that already sued a lot of compounders that are like 1% of the size of Hims. They already sued like a list of compounders. It happened like last month or so. So yeah, I totally agree that it's kind of stupid because they're not really hurting them. But I feel like it's more of a way of trying to pass a good image, let's say, because Big Pharma have always had that bad image for the consumer, let's say. So I think they're kind of just trying to say, oh, we really really care about customer safety and all that, trying to be the good boys in the situation, let's say.
they're gonna use their weight to bully everyone. And the funny part, Tanner, is a couple of weeks ago, well, actually maybe a month ago, Hims got a cease and desist letter from Novo. And yet last week, they're now in partnership with Novo. So obviously there was conversations that happened behind the scenes there. And like, I don't see Novo partnering with a lot of small compounders, like likely companies that are smaller than Hims. They can just sue and scare them through cease and desist letters to stop doing it. And then for a company like Hims, that they like it, the cease and desist letter, I think like was a prerequisite that led to this partnership. And so like now it's not even a big risk anymore, because otherwise they would have just pursued that cease and desist letter and led to a lawsuit.
I think that's true. Manuel, you mentioned this before, Steve, and before Tanner came on, that you didn't like that previously, they basically encouraged their consumers to sign a petition to the United States government regarding the compounding and all that. I don't know that it was like very simplistic. I think a part of that was basically to help the consumer know and perceive and think like, hey, we're on your side. And so then as perhaps a defensive measure against a lawsuit, because I mean, for whatever reason, Eli Lilly sued a bunch of little guys, which made no sense. They didn't sue Hims, which is quite a bit bigger, still a small fry. But I think some of that is a perception, the way that Hims is pushed themselves as far as like democratizing telehealth and, basically saying, hey, we're giving this in your hands, much cheaper. Man, look at these mean big guys, Eli Lilly, that took all that away. And that would cause a little bit of damage for Lilly, and maybe just it's kind of like a massive predator having second thoughts when its prey, which is tiny, is like, oh man, I can consume that, but I'm going to get bit pretty hard too.
Yeah, just one big point. Sorry, Eli. Sorry. Yeah. Just one big point is that Novo Nordisk didn't sue anyone because they can't sue anyone. They only can sue any compounder after the 22nd of May. Eli Lilly already sued some compounders because tirzepatide got off shortage way before that. And that's why there was some apprehension regarding Hims getting sued after the 22nd of May, because they still can. It looks like they stopped selling because of all the deferred revenue that it would imply as well. And they stopped earlier than in the 22nd of May. Otherwise, the guidance would be much larger, I would say. But that's the main reason why Novo Nordisk didn't sue anyone yet. The cease and desist letters were probably the first step. I mean, as I said, they're probably not suing HIMSS, but I would guess that they might sue any other compounders that try to overcome those rules.
Yeah, I think the Novo partnership is a really big deal, and you saw the stock react, I think, up 40% whenever the deal was announced. And not so much a big deal when it comes to revenue. I'm sure the margins will be a lot less on these products and offerings, but the big picture, at least in my view, was this carves the path for HIMSS to team up and partner with Big Pharma rather than battling against them. So that's how I view the partnership with Novo, and that's why it was such a big deal to me.
It's interesting that you brought that up, Eli, because like literally in the call yesterday, Andrew said that we want this partnership to serve as a blueprint to build a more deep relationship with Novo. And they've had conversations around like, hey, how can this partnership have an extension further beyond what it is right now? So like, I mean, look, if I had to steel man the other case, to Manuel's point, like, yes, the other shoe can drop after May 22nd. If HIMSS continues the personalized compounding of semaglutide, then Novo can just turn right around and sue them. In which case, it's like, whatever. It's a lawsuit, but it's for one of their business segments. It's going to be a big, cost to the business. That's worst case scenario. And it's very, very unlikely at this point, just given where we're tracking. I think barring that, I mean, Steve did a good job of pitching you all of the positives at the very beginning of this call. What is the level of reward on the other side of that risk?
Tevis, real quick, is the blueprint from Novo replicable with other pharmaceutical companies such as Pfizer or whoever it may be?
From a HIMSS perspective?
Yes. Are they now married to Novo, or
No.
can they replicate and do other deals with other companies?
No, just like Netflix. Netflix is never married to a movie studio. They're married to all movie studios. So again, it's just the same sort of analogy where it's the platform that enables Eli Lilly, Novo Nordisk, and the others.
So
Yeah,
theoretically, there is a world where an Eli Lilly or an AbbVie or a Bristol Myers does something with HIMSS, and this doesn't take that off the table.
Correct. I mean, you had the CEO, Andrew. He actually said that we have had talks with Eli Lilly. We want to partner with them. Stay tuned. I'm sure they're talking. It's behind the scenes, but
but there's something very important. They're partnering here. They're partnering with the direct to consumer model that Novo Nordisk launched, as well as Eli Lilly, just for the GLP-1s, because HIMSS will not partner with Pfizer, for instance, or AbbVie to sell a biologic drug, as we were talking about, because most of those drugs are taken by people with insurance plans, and the insurance covers most of the price of it. And HIMSS operates with a cash pay model. So they're partnering with Novo, only with the side of Novo that's now trying to compete with cash pay models, because this part is like Novo Direct or something like that, essentially cut off the GLP-1 price by half or 60% or something like that. And instead of having to have an insurance, you just pay the cash right away like you do with HIMSS. So it will never happen. And yesterday it touched on that. HIMSS will never work with insurance providers, because from the beginning, the value proposition or part of the value proposition has always been that you don't need an insurance to get access to high quality and cheap healthcare, let's say. So I won't say it's impossible. It's very, very unlikely that they partner with other big pharma for drugs like you were thinking about, I guess, like Humira and all those drugs that could be distributed in different ways.
Why would they not want to go with an insurance provider if that was a potential option? Like if a customer had a group plan or something like this that they're already paying into, wouldn't that be cheaper for the customer to put it through insurance?
Yeah, one of you guys can answer. I'll throw up the visual of Andrew responding to this yesterday.
In essence, it's very low margin, and it's insurance companies are a bear to work with. And it takes a lot, even with AI, I imagine, It takes a lot to actually be able to get those fulfilled, and you never get 100%. Like insurance, it just will fight you tooth and nail for the reimbursement. So that's the reason why like Walmart actually ended up getting out of this entire space for the most part. Is like,
And
they
that's
were
why,
dealing
for
with
instance,
insurance.
Teladoc was a disaster.
Oh yeah. And so like LifeMed is one of those, like somebody asked in the comments, it's like, aren't they admitting him? It's like, kinda, but they're also in the insurance side, which I do think though, Manuel, that there might be like one or two product lines in the future where they're like,
Yeah,
okay,
potentially.
it makes sense to do insurance just on these products only, but yeah, it's not going to be a big part of their business.
So there you have the quote, Tanner, from the CEO yesterday when he was asked by analysts, why won't you, like, what do you guys think about insurance? And basically it's just, they have a low interest in it because it's not like the juice isn't worth the squeeze from their perspective.
Got you.
And it would kind of go against the company's mission, let's say.
Yeah, one of their biggest value props is making it more affordable for their consumers, right? And that's part of it is that whole subscription offering. So
No, I understand the insurance piece pretty well. But if you're a part of some corporation where you're in a group plan or something, and then you're paying into it regardless, I mean, it's potentially more expensive to be quote unquote paying for that, and then also cash paying for your drugs as well.
So, okay, Steve or Tanner, do you guys have any more questions around him? Steve's on the phone. But either of you guys have any more questions? Tanner, what is still
Yeah.
like standing for you?
I'm curious because I see other companies that come out, like I think Row or Blue Chew, or I don't know the parent companies of these businesses that are similar, but you know, another thing that's always worried me about Hims is just like, how replicable is this from another company that's really good at marketing?
Can someone pull up the other graph of Hims eating market share?
I've got
With-
that.
Okay, perfect.
I also wanted to add something about this graph because it's very bullish, but I think this is kind of not the reality because the market share there is just picking like 4 or 5 competitors, and there are like thousands. And some of them, for instance, BetterHelp is like a subsidiary of Teladoc, which just has like mental health offerings. So it doesn't make sense to put like on the side of Hims and Row, which have much larger offerings. So yeah, that graph is very bullish, and a lot of people on X like to share it because I totally understand, because it validates the thesis. But even as a Hims bull, I think it's kind of misleading because you see like market share going from 10% to 45% in 2 years or 3 years, and
Well-
it kind of overstates the big picture. But
You're handpicking names.
the conclusion is the same. It's eating market share, but we can't really draw conclusions on those numbers, in my opinion.
It's going to be difficult to get anything more accurate because of the variance of verticals that they play in. The competitors are going to be very different in weight loss, as in like, you know, skincare or hair or ED or whatever. Like, you're going to very rarely find somebody that plays across all 4 of those verticals. So it'd be an apples to apples comparison.
Yeah, but
Yeah.
Row, as you said, is definitely the largest competitor, I would say, of Hims.
What I'll say is the competition is always going to be out there. Where Hims is differentiated is a few things. One is MedMatch, which is proprietary. They have a bit of a virtuous cycle here. So the more consumers they get, the more data they have, which helps them in turn propose better solutions. It also helps them to be able to come out with more personalization and higher level personalization. It also helps them with word of mouth as well, which is all part of their ecosystem, which again turns into more consumers as well. Are there going to be bumps along the road? There absolutely will be, but they also, you know, control not just their own tech stack, but they also control, you know, at least to an extent, some of their own compounding pharmacies as well. Their acquisition, their smaller acquisition stuff too. So this is not a, hey, we're just going to be the middleman in this, and anybody can be a middleman. They're differentiating themselves from a lot of the competition in a way that is producing a fairly durable moat, and I think it grows more durable, not less, over time. It has so far.
And it's like SoFi, it has that flywheel effect, right? So
Yeah,
it's like that's a similar analogy. I feel like that makes the most sense for Tanner. It's literally just the flywheel that SoFi has.
yeah. Let me pull that up. I have it right here.
And the data they have is also important.
So so MedMatch, Tanner, is basically like their teledoc. It's where they have a funnel of matching you to a healthcare provider through their system, gathering all of your previous healthcare data, and then suggesting what products that they want to sell you or cross sell you into. And now with the new recent acquisition of Tribe Labs, they're actually going to have like an at-home testing kit where they can just draw, your biomarkers, your blood through like pricking your finger. And then they have Tanner's biomarkers, Tanner's, entire health history, and they can just then funnel you in, put you in that database and personalize something that's custom for you.
Gotcha.
Yeah, that's the I'd say that's overall one of the long-term bull cases is the precision medicine aspect of it. And that's almost what my whole portfolio is built around. I mean, two of my biggest holdings, Tempest AI and Hims and Hers, and they're very different, very not competitors, but precision medicine will be the future of healthcare. I think Hims will be a leader in delivering to the masses.
He's
So they
not-
already are.
Sorry.
What'd
I
you
was
say?
trusting the comment that got brought up.
Steve
Steve,
talking to
Steve of multi-streaming here.
Steve's pulling a Dan Dolev on multiple streaming conferences.
He's not. He's not.
Sorry, I was on a work call. What do you want me to say?
Wow, this is your work too. This will make you more money than your job will, dude. All right, what other questions do you guys have? I think this has been productive.
No,
Manuel,
I don't have any. I think I'm going to buy.
Just for your context, Manuel, I get this pushback every freaking time I'm on the podcast with these guys. Well, I don't understand. I don't like making money. So
I don't like making money.
Poor guys. I
No,
would add something to the competition part, which is the demand is huge, man. It's really huge, and especially in America, it's growing like crazy because of your broken U.S. healthcare system. And I mean, there's space for plenty of consumers and competitors. Sorry, and actually, for instance, Amazon Pharmacy and other competitors coming, it actually at the same time accelerates the adoption of these kind of treatments and of telehealth offerings as a whole. So I think, of course, as long as Hims continues to differentiate itself from competitors, I think more competitors is actually good for the development of this sector, let's say.
Yeah, that's fair. For me, it's just been nothing against Hims. Obviously, I've seen the triple-digit growth over quite a while. That looks insane. But Tevis is trying to get me on or in an industry that I've just never taken a shine to, and I'm aware that obviously like personalized medicine and stuff will be potentially the next big wave. But I also, Steve. It's just a matter of like I can't know the entire market. There's a lot of good companies out there. Maybe not as good as Hims. I don't know. But
no, to be honest, if I just face the company right now, I would be kind of skeptical as well. I understand, like, especially after this huge run up. I understand. I mean, you look at the numbers and you clearly say that it's a great company. I mean, it's impossible not to at least consider it.
No,
but
yeah,
I understand that, especially with all the drama that the stock brings, like every single week there's a new drama, and suddenly shorters were right and now longs are right, and next week who knows what's going to happen. Some news that have no relation with the company's business will make it tank like 20 or 30%. So it's a wild ride that I understand why some people that just got to know the name feel, let's say. But yeah, I mean, it's totally different from a person that started to invest like 2 or 3 years ago when no one was listening to anything. Like there was one analyst on the call and there was no noise. Like it's probably the most noisiest stock in the market right now.
Yeah, and I'll say this is a battleground stock. Just to kind of recap something I said, I think before you two guys came in, there's one bear case argument that I think has effectively been destroyed, which was the the lawsuit risk. It's still there, but it's not credible. Honestly, it's very small. But I think it'll be a battleground stock with high short interest, and there will be some days where people betting against it win, and some days where it goes up. It's going to be very volatile, probably for at least the next 2 quarters. This again was the least important quarter that they've had in a long time. It was. All of them are important, but the next one's the most significant, and it will decrease, barring a surprise. They're guiding for a decrease in quarter-over-quarter revenue, and guess what? That'll fuel the bears. Even though they said it's going to happen, even though they explained why, it absolutely will. So for at least for the next 6 months, I expect a lot of back and forth, and this is not a stock for everyone as a result, especially those that like making money like or don't like making money like Tanner.
Yeah, I mean, I agree big time that it is a battleground stock. 33% short interest should be an indication of that. And at the end of the day, like, I think the craziest thing that I keep coming back to is like they're a 10 billion market cap doing 2.5 billion in revenue this year and growing triple digits. Like, and they have no debt and they're buying back shares and they have 300 million in cash. Like, I don't know what it's just the cleanest financials that you can possibly see. Go ahead, Steve.
No, I was just going to say that, Tanner, normally I find things I don't like and I can make an argument not to buy something. I'm not seeing many reasons, unless you don't think that they don't have a sticky ecosystem that's going to grow in the future. The numbers are the numbers and they're solid. I've never looked into them before, and I'm actually thinking about buying them tomorrow.
Yeah. I think it's a fair value here. It's not undervalued. But that's what I told Tanner and Amit when Amit sold at 40. I'm like, dude, hang in there for 50. Just kidding. But
No, but yeah, to be fair, a lot of people are, because now it's probably the most hyped stock on Hex. Like even more than Palantir and all that. Like I literally scroll and it's only him's tweets and like, oh, this is a $100 stock. This is a $1,000 stock. It's a $1 trillion company in the making. Like, I just want to say,
I think that's a little bit of your algorithm, though, because I honestly never see him stuff ever.
I mean, yeah, but as I post a lot about hymns and I grew a lot because of the hymns community as well. So I'm very grateful for that. But now it's becoming kind of full of nonsense. And I think it's partly because of some well-known people that make huge claims
every day.
But I mean, I understand that people are very bullish, and now retailers feel like they have like all the hidden gems, especially after Palantir and after Robinhood and all that. And I still think that HIMS is a great long-term investment, but a lot of people need to chill with those 100x price targets in 10 years and all that. It's just like, try to be safe, guys. I mean, you can overweight. It's a good company. I'm not here giving any financial advice, but guys, chill with those targets. It's really insane.
Yeah, one thing you said, Steve, that I really agree with is how huge testosterone is going to be.
Huge.
Yeah.
I don't think people realize how big it's going to be.
Correct.
And my one question, I think I said to Tevis on the phone yesterday, was I know Regeneron is working on some very big testosterone component that is supposed to basically make anabolic steroids obsolete with very minimal side effects. I haven't done a ton of research on it, but it is supposed to support males over 30 or 40 with a lot of different things. So I can completely see the testosterone segment of this going gangbusters.
Yeah, me too. As well as peptides. Peptides are huge. Like you said, I don't think people understand testosterone's impact on your overall quality of life. And you're not going to just impact the older generation. You know, as you get older as a man, your testosterone gets lower and lower. It's just part of it. But unfortunately, even the current younger generation, we're just a low testosterone generation. The chart is steadily declining. So that is bullish for him. You know, that's going to be getting into testosterone, but I think it's going to apply to more people than we realize. And one trend in healthcare that I think we're going to see is not just treating the sick and getting them better, but improving the quality of life of the healthy. And I think testosterone and peptides, like the magic of some peptides, is going to play a huge role in that.
Yeah, and I wouldn't even say it's a society thing. When males hit the age of 25, they start, or even a little bit earlier with some males, their testosterone and HGH levels, I'm sorry, my phone's going crazy, start to decline. And when males get into their mid-30s, it really starts to decline a lot more rapidly. And it's becoming more normalized to go on TRT under doctor supervision. Yep. And if HIMSS can have a proprietary system where they personalize it for you and make it easier and give you a subscription where you don't have to get stuck with a needle, it could be very interesting because the TAM is absolutely huge for that.
Yeah, and let me just share one thing, and I promise this is not to throw shade at the Palantir folks, Nate and Roy and Stephen Hall, but like,
whoa, don't put me in the Palantir folks. Whoa.
Okay, Roy Nate. The reason I bring this up is because of a comment that Manuel said, like, oh, it's very hyped on X. Guys, there's a big difference between being hyped on X and being overvalued in the market. Like, if you look at just like the ratios of revenue to market cap, of course, this is cherry picking. This isn't like
net income.
Compare any company to Palantir.
The first comment is exactly what the market is understanding with this company. And so my point is not to throw shade at any other company, only to say that all of this volatility that we're seeing, all of the hype that we're seeing on X, like, you are still so much in the early days of this company. If you look at their product roadmap, and I have posted about this in the past, and I'll bring it up on screen, but if you look at their product roadmap, they're still so far in the early innings of just what they're going to launch. Here, let me throw this up and tell me if you think this is a company that is towards a later stage or the earlier stage. All of these blank spaces here are products that they have on their mind to launch, but they haven't gotten around to yet. And number two is 2025. Yeah, go for it.
All right. So this is, I guess, the only sticking point for me. When I look at this slide that you put up, I don't think that you showed this slide before. And if you did, I wasn't paying attention to like substance abuse, diabetes. Let's use diabetes. There are several diabetes drugs. They've all gone through FDA approvals. Most likely, somebody is not, I'm going to make a generalization. It may or may not be correct. I would like to think that most likely somebody who has diabetes is not going to go on something from HIMSS versus something that their doctor recommends as a prescription, because diabetes is a very serious thing. What would be the reason why HIMSS would be able to get a portion of that prescription drug category in something like diabetes that is very personalized with doctors?
You can say the same about GLP-1s, and they got a bunch of customers, I would say.
I think it's going to be...
HIMSS as prescribers, third-party prescribers. They just don't give you drugs.
Right, but GLP-1s, people... I don't know if that's the best comparison.
No, but like in every solution...
People will go to the gas station and go take an over-the-counter freaking weight loss thing. So I think people would be willing to take GLP-1s to lose weight. We live in a vanity society. But when it comes to diabetes, that's something that's always traditional, being through a doctor. How is HIMSS going to capture that market?
So first of all, HIMSS has doctors on staff. Like, they have their own staff of professionals. And like the audience is literally giving you the answers. Look, saying a lot of diabetes drugs are no longer under patent. They can compound them through their Triblags acquisition in their 503B facilities. You can submit your sugar levels. They can personalize a dose for you to the exact insulin you need. Right?
So basically, it's the same thing. You basically send them all your blood work, and they build a diabetes prescription for you.
Yeah, they literally bought a company that sends
Yeah.
blood kits to your home for them to collect your biomarkers.
And that's why they haven't launched many of the new categories, like testosterone, for instance, as you were saying. They literally said this. They want to first have that at-home testing device so that you can like send your blood levels, and that, because most people don't know this and or think otherwise, but HIMSS doesn't really rush categories. HIMSS takes a while to launch new categories. It launches a lot of categories like gradually, but at the same time, they always take like 1 or 2 years to prepare everything for the launch. For instance, GLP-1s, I remember when no one was talking about HIMSS, and HIMSS was talking for like 1 or 2 years about GLP-1s when like no one was not even any single company or any analyst in the market were talking about it, because and analysts were always like, are you doing something for weight loss? Are you doing something for weight loss? And they kept for like 4 or 5 quarters saying, yes, we are trying to develop something for weight loss, but we don't want to just launch anything to the market and then give it to the customer and the customer just like dies or something like that. It's really a big risk to do what HIMSS does. So they always try to find the right solution for the patient. I'm not saying they're like the best healthcare company in the world in terms of achieving the outcomes, let's say, but they're not, as many bears say, and even like a lot of bearish articles on Wall Street Journal and all that, saying that HIMSS just tries to force customers' prescriptions and tries to like sell as much as possible by not caring about the safety of the customers. This is also a big bear case, not only related to GLP-1s, but like the litigation risk in general. Because imagine you take a pill from HIMSS and you die. Like your family will try to sue HIMSS, I would at least. And that's also a big litigation risk that I think many shorters still think exists. And it exists, of course. But that's why HIMSS like has third-party prescribers and also their own staff, as Tevis was saying. And they try to, the chief medical officer they hired a few years ago oversees a lot of this stuff, especially in the weight loss part. But I'm sure they have plenty of experts in other categories to try to not put the step where they shouldn't do. And so I think this is one of the things that most bears are waiting for. It's like some catastrophe, like some really bad outcome to a client, which is possible, of course. I mean, I'm not here saying it's impossible, but HIMSS tries as much as possible to mitigate that possibility.
So you said something about the markers. So let me ask you this. The very scientific blood tests, especially from 10X Health, they're becoming very popular, probably because Dana White's all over the place talking about he's completely transformed his health. Would HIMSS have the ability to do the same type of genomic testing and make specialty vitamins for people who are deficient in certain areas and make specified multivitamins based on specific body types that are deficient in vitamin D?
I mean, I could answer
whatever
this
it is?
question. Of course they could. Why? What's stopping them?
Or would they? Is that something that's
I
ever
think
been
that the market is large enough to
Let me
address.
throw you something from their Q1 earnings transcript. They're basically asked about their plans, and look what the Yemi is the CPO, Manuel? Or
Yami is a CFO, sorry.
CFO.
Launches of multi-condition treatments that fold additional benefits in, like vitamin support, hair loss prevention, testosterone support, and cardiovascular health.
That could be huge. I mean, that could legitimately be huge because most people take a multivitamin because they don't know what they're deficient in. They just take a multivitamin just because that's what we've been programmed to do. If they can make proprietary multivitamins for you, that would be very interesting.
And I think you just nailed it, Steve, because their entire roadmap that they're highlighting right now is to move from a personalized offering right now to a preventative measure in the future. By collecting these biomarkers, then they can, in your example, for example, tell what you're deficient in, and then have preventative care for you on a subscription basis. That's not necessarily like it's going to fix a problem for you today, but it's something that prevents issues down the line.
Yeah, that's the trend I think we'll see in healthcare as well, is the preventative medicine aspect of things. And that the at-home testing kit is going to be crucial for unlocking many different product streams.
Yeah.
Well, I'm very interested. I think you guys did a very good job.
You going to full port?
If I can make a suggestion to you, Steve, you're already aware of the premium on options. If you're entering tomorrow, I mean, maybe a small position.
I mean, I'm probably not entering tomorrow just because I want to see if it sells off, but
yeah,
I am probably gonna be selling cash secured puts on it.
Yeah.
And scale into a position that way.
Steve
Yeah,
found
I
out that
think
they're
that's-
about to sell multivitamins, and he's all in now.
I don't think you understand how big multivitamins can be, Tanner.
Bro, if they're going after Jameson, they're done.
What, do you take multivitamin?
Yeah, I showed you on the screen.
Exactly. You got it right on your desk.
Yep. It's the only pill I keep on my desk.
There you go.
Actually, that and Lactaid.
Tanner, where are you sitting? Are you like feeling more comfortable, or how do you feel?
I need to do research that I haven't done. I do not know the healthcare space. I really do not. Being a Canadian probably doesn't help. I don't understand the benefits of or what's stopping them. I mean, I always worry whenever there's companies that are trying to disrupt something that is so heavily lobbied. Like, I don't know. It's a tough space for me. So although they're doing good, I just have concerns. I don't know. And I also don't know if my concerns are even warranted at all.
I have concerns about your hat.
Bro, you're the grandfather that's like, oh, your jeans are ripped. And like, I don't know, man. Aren't you in your 30s? Leave me alone.
Did you look at your brim?
Yes.
So anyone that's in Tanner's boat, I know that Manuel is Nottingham's now, and he has a post on that. But if you go to X, subscribe to him. He's a good follow anyway. Does things very well, very thorough, very transparent. He has some incredible posts breaking down HIMS, which were very useful for me when I was first looking at getting into the stock, and then got into the stock as well. I have, for people that don't like to read, I guess, I don't know, like 20-minute video on HIMS looking at the bear and bull cases. It was before this earnings call. Nothing has really changed as far as those. That'll give you a broad brush overview, but I do recommend, if you want more granular level, of course, pull up the earnings slide deck itself, but follow Manuel, see what he said. Even like 9 months ago, like it's still mostly true today, although just better, but he's a good follow. And any of these guys, honestly, except for Tanner and Steve, because they don't know me, or Tanner does, but yeah.
Thanks, man.
Shall we wrap there? Because I just realized that it is 1 a.m. Manuel's time, so he's been staying up trying to convince Steve.
No, it's actually close to midnight now.
Ah, okay. Well, that's
No, I mean, listen, good job. I think it's very interesting.
He's going to pop some hard mints and do a customer review.
Get some buying
Probably
pressure.
not, but
I mean, or gummies. They have form factors. So
There you go.
thanks, everybody. This was a really fun stream. I think the most people we've had on one stream I've had at a single time. And TBD, Roy, I don't know if we're doing a bootleg tonight. Depends on how you're feeling. But if we are, it's going to be at 8 p.m. on mine and
oh
Roy's.
boy, we could talk some Palantir.
Yeah, we do need to talk Palantir. We need to talk PayPal.
All
A
right.
little kind of bit of HIMS, but we mostly covered that here. And the macro stuff. If you guys haven't noticed, the after hours is pumping. There's some interesting speculation and confirmation from China.
Or are they
too.
speculating that there's going to be a
China.
rate cut tomorrow?
No. Trump had said that an
Let's save it.
earth-shattering announcement. Okay.
Let's save it for bootleg. It sounds like Roy is in at 8 p.m. It sounds like Steve is in. Manuel is going to be long asleep, and hopefully the other gentlemen join us as viewers. Thank you so much, everybody, for sticking with us and listening to the HIMS bull case. And we'll see you whenever we do another HIMS show. Goodbye.
Who knows when?